Hello, and welcome to ASC 842 Lease Accounting, 10 Best Practices for Day 2 and Beyond, presented by CoStar.
Thank you, Michelle, and hello to everybody. Thanks for joining us today. And we are going to be talking about ASC 842, 10 Best Practices for Day 2 and Beyond. And first, we'll provide some brief introductions. Again, my name is Matt Waters. I'm a CPA, and I work for CoStar. I've been here for about 6 years now, since the very beginning of the ASC 842 and IFRS 16 journey, since the standards were issued. And before that, I worked for the Home Depot. I led the lease accounting team there for about 6 years. And I also worked at a company called American Tower, which is a cell phone tower company with hundreds of thousands of leases. And I was in lease accounting there as well. All in all, I've been working with leases in accounting for about 16 years now. Yasha, will you introduce yourself?
Yeah, sure. Thanks, Matt. Yeah, so as Matt said, my name is Yakov Zenkov. I'm an associate director with Protiviti, which is a global accounting consulting firm, amongst other things. I've been, I'll say, pretty much single-threaded into ASC 842 compliance for about the last 4 years, really starting with, what does the standard mean? How do we go to market? But now I've been in client service for the last 3.5 years, transitioning a lot of the public companies and now a lot of the privates. I'd say over 30 end-to-end projects. I've seen every, I'll say, system out there.
Okay, great. Thanks for joining us today. Really appreciate your insights as we talk about this important topic. And the next slide is just really a overview of what we're going to be talking about today. And I'm not going to read through this because we're going to go through them in depth. But I did want to just spend a minute and tell you guys where the list came from. You see 10 best practices. So, to me, the next logical thought is, well, how do you know they're best practices? And reason why we know is companies have been at this for a while now. The public company deadline was back in 2019. And so hundreds of public companies went live with lease accounting software and complied with the standard. But then, the non-public company deadline was initially a year behind, and then there have been a few deferrals after that. And so non-public companies still actually haven't been required to comply. They're kind of in the home stretch now. So at CoStar, we thought this year, leading up to the non-public company deadline, was going to, just be almost entirely focused on private companies. But what ended up happening is we've had tons and tons of business associated with public companies who chose a software 2 years ago and are now already switching to CoStar. And the reason they're switching to CoStar is to pick up functionality that really make up this list of 10 items. So when we have those discovery calls and try to understand how we can help, we always ask, well, why are you switching so soon? Because nobody wants to change software after going through a process, just 2 years ago to implement something. But they tell us these 10 things really, these are the ones that really rise to the top, and we hear over and over at least. So that's where the list came from, and then we also have collaborated with our partners like Protiviti, and we hear the same type of feedback, from their experience in implementing ASC 842 solutions, and so we thought this would be beneficial, not just for the non-public companies that are really kind of just getting started on the journey, but also potentially for public companies that are here today that might want to make some improvements. And with that in mind, I think, Michelle, we have our first polling question.
Which best describes your company and status for ASC 842 or IFRS 16 lease accounting transition? Please be sure to make your answer selection and press submit for your answer to be recorded. I'm going to give you about 20 seconds left to make your responses, and we'll move to the results. And here are our results.
Okay, excellent. Yeah, so it looks like a lot like what we expected. Non-public companies certainly well represented as you near your deadline, and then also several public companies attending as well. So that's great. And I think, as I mentioned, we're going to provide something for everybody here today. But diving right in, we're going to talk about our first point, which has emerged as a best practice, and it is integrate the lease accounting system with the ERP system. So, really the idea here is that, a lot of software and, opportunities, that out there in the marketplace, you can calculate lease accounting balances, right? You can find a calculator to give you a right of use asset balance and a lease liability balance. But then going forward, you have to book journal entries, and it's not just a one-time journal entry, it's every month. Period after period after period, you're amortizing those balances. And so if you basically just have a calculator, you have to go through the steps every month of getting that information into Excel, then putting in your GL account numbers, your cost centers, and everything you need as far as a GL stream goes, and then you upload that into your ERP system, and hopefully everything goes through and everything balances. If not, you have to fix it and try to re-upload it. And so what we found is companies that decided to manually book journal entries up front, after several months of that, it got kind of old. They decided they wanted to integrate the lease accounting solution into their ERP system. And so that's something that's really emerged as really one of the number one best practices that we see. Integrate your ERP and your lease accounting solution. Yakov, I'll turn it over to you for your thoughts on that one.
Yeah, thanks, Matt. No, and I completely agree with you. I'll say, looking really at the day two compliance items of this, I cannot tell you how many clients I have that are exporting, the journal entry file, the AP file, and then are doing manual manipulations in order to get it into the ERP. And really, the focus there is relatively easy. And, if you have one single ledger, one single lease accounting system, those are things that are very easy to integrate. And don't think of an integration as, hey, your lease accounting system has to perfectly create the file and it has to be in this exact format in order for your ERP to pick it up. There are things and calculations that can be done on top of this that basically do that manipulation, that massaging that you're doing in order to post it. And then, we've kind of talked, and Matt mentioned at least on the from lease accounting system to ERP integration, some of our most successful implementations and, day one go lives where we also looked at to lease accounting from third party, whether it was a vendor or, another third party integrations, where if you have a large, massive fleet, and let's say that fleet of vehicles is all under one lessor, we've been able to successfully in the past, work with the lessors for them to deliver a file and then for your lease accounting system to read that file and, stage all the new leases, identify what's been terminated and remove all of those, or at least stage that type of data in the lease accounting system, which really makes the administration of this so much easier going forward. Because anytime, obviously you're going to invest in people or you're going to invest in technology, but if you invest in technology, it's repeatable forever. That's a one-time thing. And, in a lot of these instances, these lease accounting softwares, whether it's CoStar or anybody else in the market, they support these things going forward. It becomes a part of your license fee, so you get that benefit forever and ever going forward. And it's really now going back, you've done day one accounting, you've done day one compliance. It's now really, hey, day two, what's my low-hanging fruit? And I can't reiterate integrations enough.
Yeah, excellent insight there, Yakov. Thank you very much for that. Just a couple of screens here on this point. You can see kind of a representation of CoStar, the lease accounting, lease administration solution in the middle. And then just like you said, you have items being imported in one of them being vendor information, and that can really take a lot of different forms. Master vendor data, even from the ERP system, can come into CoStar to make sure that your vendors are accurate. That can also come in the form of a fleet vendor file, and the large fleet vendors are now quite accustomed to requests for data to support ASC 842 accounting calculations. And so you can see other examples here like discount rates and currency rates, and then flowing through the lease accounting and lease administration subledger in CoStar, and then the exports, that really the most prominent one being the journal entries into the ERP system, but also really important, the AP export, if you have a lessor scenario or a sublease type scenario, AR export can be really valuable. And finally, and certainly not least, financial reporting, exporting information into other systems that are used for financial reporting, including systems like Blackline or TrendTech that are used for account reconciliations. Just a couple of logos here, just to get the kind of the wheels turning on the different types of systems. But we always get the question, I don't see my ERP system shown on your logo sheet, but note that we have delivered and supported over 800 system integrations. So we can certainly integrate with any ERP system out there, and these are just a sampling of some of the more common ones. All right, the next topic is to implement one seamless solution for lease accounting and lease administration. This really goes hand in hand with the last topic, but what we found is that sometimes companies will decide to just purchase a lease accounting solution. And it's just kind of a standalone solution. It does lease accounting, but then they maintain their current process for lease administration. Now, that can work, but companies have quickly learned that it's not the most efficient way. This is because the lease administration team, of course, they have to enter in data to make sure the lessors are paid on time, and accurately, and that the dates for renewals and notices and all of the dates that they track in lease administration, that those are adhered to. But then the lease accounting team needs pretty much the same exact information as far as the dollars associated with the lease go, the dates, and the renewal options. And so what ends up happening, if you have two disparate systems, the two teams end up entering data twice. So really it's a scenario involving double work. Nobody likes the sound of that. Certainly not if you're the one having to do that busy work every month. So the best practice is to implement a solution that has lease accounting and lease administration all in one seamless solution. So then when the lease is abstracted, the accounting team automatically has the information they need. Yakov, over to you.
Yeah, for sure. Thanks, Matt. And I will say, so that implementation, in a silo where in 2018, accounting was just focused on getting day one correct. And even though there maybe was already a legacy lease administration system, but accounting said, hey, I need lease accounting. I need to sprint for 1/1/19, or, maybe you're sprinting for 1/1/2022. That kind of implementation in a silo was surprisingly more common. Matt had kind of mentioned earlier that, there's obviously all the private companies that are transitioning now, which is a big stream of customers, but we are also surprised on the more technical, the accounting assistance area, how many companies I have that were public that went live, and maybe they went live with lease accounting in a silo, and they said, hey, we're going to address this 3 years down the road because guess what? I have lease administration as well, and lease administration is in a different software, and it's way too much work for me to make sure that I get accounting right, but that lease administration is also now happy with this new other software that we're going to. So we see this, I will say, surprisingly more common. And, it's really now in day 2 as you're getting here where it's time to look to see if you can consolidate some of these things. Maybe your lease administration, software license is expiring, those kind of items. And this is a great efficiency point because, as Matt had kind of said, yes, lease administration probably needs a little bit more than lease accounting, i.e. they might want clause data, maybe variable expenses or some other things that are being loaded in there. But really the base information that both groups need is the same. I need renewals, I need payments, I need to know when modifications happen, start and end dates, and having one system for both of these is significantly more efficient where you're not replicating things in 2 different systems. And I will say this, so all lease accounting systems generally have lease administration, whether you're looking at CoStar or into the other ones. There are legacy lease administration systems that don't always do lease accounting, which is, why we always had this big push in legacy 2018 or even right now where we're just saying, hey, accounting needs this. I'm getting close to my compliance date. Let's all run. But really, as you're going through, and I'll urge all the companies that are on today that have not started to adopt, is do this company-wide, look at what real estate needs, talk to Treasury. Maybe even procurement if you do a lot of equipment purchases or equipment leases, and make sure that you're implementing a solution that kind of meets all of these different groups' needs.
Yeah, absolutely.
Back over to you.
Always a good practice to bring in, kind of a diverse group when you're talking about this. We're a lot of companies are surprised at how many departments in their organization need to be involved in those discussions. And this is just to drive the point home. We showed this before, but here we just highlight lease administration, lease accounting, all in one system. And we don't have time to talk about it today, but project management, transaction management, workflow approvals, also in the same system, really starts to give you a robust set of functionality that you can use well into the future, not just for the day 1 lease accounting compliance. But moving on to our next topic, which is to automate lease remeasurements. So this is squarely in the day 2 arena, and really the initial push for compliance, gross up the balance sheet, add the right of use asset and lease liability is what you have to do up front. But then the leasing industry and the way companies use leases, it changes quite frequently, right? You have terminations, you have renewals. We've seen a rise in the number of impairments associated with leases for a couple of reasons. One, you now have a lot more assets than you used to. It used to be only capital leases had an asset associated with them. Now we have on the balance sheet, we have operating leases with assets. And so all of those assets are subject to impairment testing. So impairment is a big type of remeasurement that is really pretty more in the mainstream, I guess I would say, now than it used to be under ASC 840. Also, certainly the pandemic has caused a lot of scrutiny around right of use assets, and that's kind of just raised a sense of urgency around getting that impairment testing right, and then the subsequent remeasurement of the lease accounting calculations need to be correct as well. But when remeasurements like impairments, like terminations, like partial terminations, and renewals, when those are performed, there's a pretty good bit of calculation that needs to go into that. You have to redo your net present value. The discount rate can change. Sometimes there's a difference in the amount of the change in the lease liability versus the change in the right of use asset. And in that case, there's a gain or a loss associated with the remeasurement. So for all of those reasons, it really becomes impractical to calculate this outside of a system, using Excel. It also becomes impractical to use a system that doesn't have built-in remeasurement functionality. What we've started to understand is that some software has a process of performing remeasurements, but what the process involves is just creating a new schedule. That doesn't actually work according to the accounting rules. Not to mention you end up losing some of the history of the old accounting schedule that typically auditors are going to want to take a look at. And so for all those reasons, really having an automatic process to cover the various types of remeasurement is really key. And this is another reason we see companies switching over to CoStar to pick up this functionality. Yakov?
Yeah, and the only thing that I'll add on top of what Matt was saying, so we saw a lot of implementations, and as I said, kind of mentioned before, I have a lot of experience with a lot of different software vendors, but again, from the technical side. But in 2018, when we were going through, the main focus was to get day one right. So the main things that we were talking about with the software vendors was, hey, can I get disclosures? Can I get my initial right of use asset lease liability? We started to look at day two accounting, but everybody says, hey, I do most of these things. Here's the things that I know I don't do, and they're on my roadmap. As you are now sitting in 2021, and whether you're a company that's implemented and is now looking to improve efficiencies, or whether you're looking at vendors right now, the most important thing is that all the lease accounting items that are required, and really partial terminations, partial impairments, those are very difficult accounting cycles. Those should all be native functionality in every software that you're seeing now. This isn't 2018 where, I've got a new version from every software vendor every 3 weeks because we're all sprinting, which is the reason for that original deferral was this is way more complicated than everybody saw. We're now sitting in 2021 where we've got proven vendors. The roadmap items should have been completed. So if you're looking at anybody, you're really looking for A to Z lease accounting functionality, including the one-offs, which again, I'm just going to mention partial terminations, partial impairments, very complicated cycles because it requires adjustments. You need to maintain historic items. Make sure that your systems are doing these things correctly. And if they're not, ask when it's on the roadmap and ask when was it originally on the roadmap as well. Yeah,
Absolutely. Great point there. And really hand in hand with that, we'll just roll into number 4, automatic retrospective true-ups. And so a retrospective true-up is really just like it sounds. It's a true-up to a past accounting period. And what this is really something that's quite commonplace in accounting. I'm sure all of you on the line who have worked through month-end close, inevitably you get to the end of month-end close, everything has been booked, maybe even the reconciliations are done, and then you find out, oh man, a lease was signed or a renewal was signed, and it actually, was effective last month. And so then the decision has to be made. Well, was it big enough? Do we open up the accounting period? Do we redo the reports and the reconciliations? Or if, is it small enough, immaterial enough that we can just book the true up in the next open period? And so, really that's a common occurrence, during month-end close and affects, accountants as they just work through their process. And so what we've done is we've automated that in CoStar. If you get information late, you can still change the amortization schedule. You can still book the remeasurement according to ASC 842 rules. But if the journal entry has already been posted and basically the period has been closed, CoStar will not change that prior period. So you won't see a journal entry generated that goes into a closed accounting period. What you'll get is a comparison of what should have been booked in the closed accounting period what actually was booked, and then the delta or the true-up amount gets posted in the next open period. So again, it's called retrospective true-ups. It's automatic in CoStar, and you know, it's something, again, you have to make a judgment call on, you know, maybe if it's year-end close, and then you find out after year-end close that you signed the lease for the new corporate headquarters or the new corporate jet, right? I mean, that might be material enough that you actually do want to open the prior period. But if it's you know, if it's a small sublease or something, certainly the retrospective functionality, you know, that automates that true-up entry can be quite useful. Yakov?
Agreed, Matt. And really the main important thing to highlight is that ability to seal historic numbers as is and book that retroactive true-up in the current period, and to give you that flexibility, i.e., even though maybe this thing was effective 4 months before, you've closed the prior periods, it wasn't material enough, you don't want disclosures changing, because, you know, that's going to be audited over and over again as long as you're continuing to present those financials. You just want that catch up in the current month. And then the one other thing that I will say, Matt mentioned this as being common. That's the way that you need to look at it, whether you're currently, you know, in the market for a system or you've already transitioned and you're using a system, is this isn't an exception. It's very common for you in a fixed asset cycle to be notified 2 months later that, hey, we put something in a service. Sorry, I forgot to tell you. This is a normal part of the process. It needs to be normal functionality built within your systems.
Yeah, absolutely. And here's just a quick screenshot from the system showing you how this works. The original schedule shown up top, the remeasured schedule, so you know what it should have been, and then the retro schedule, which is the difference in the two, and then basically you just get that last line booked in the next open period. The other periods have already been exported and approved, so those are locked down, and it applies to all the scenarios we talked about: renewals, terminations, partial terminations, impairments, data corrections, and you know, really any other type of remeasurement that you can think of. All right, next topic we'll talk about today is systematically control policy compliance and data quality. So really when we think about this, you know, I like to say these are the types of features in a software that help you sleep well at night. You want to know that as you're entering data into the system, as other people are entering data into the system that affects your team, you want to know that it's right, you know, that it's accurate. And really there's two ways that data gets into the system. First, we'll talk about manual entries. You know, so for example, the accounting team goes in, you know, say they're going in on a new lease and they're performing a test, and they're deciding if it's going to be a operating lease or a finance lease. And so let's say that the accountant says, okay, this is an operating lease, but they have entered information in the system showing that there's a transfer of ownership. So if there's a transfer of ownership, ASC 842 rules indicate that it should be a finance lease. So the system will flag the user and say, you know, just right there on the screen with a pop-up, hey, are you sure you want this to be an operating lease? There's a transfer of ownership, so we think it's a finance lease. Now, CoStar doesn't force your hand, but the user will get that pop-up. There will also be an alert on the record. So maybe if they accidentally overlook the pop-up, they would still be able to view any alerts, you know, in a list form. And then finally, there's a report that can be run. So, for example, if you're a accounting manager, you could run a report and see all of those types of exceptions for your whole team. So again, you know, this will just help you ensure that the data is accurate, that the right decisions have been made following 842 rules, and even your company's individual policies. And you know, I gave one example about classification testing. but there are dozens of these automatic checks that take place behind the scenes. Now, another way data gets into a system is through bulk upload, and bulk upload is really efficient. So if you're, the most common thing right now, especially as the private companies think about starting 842, the most common bulk upload will be your initial bulk upload of all your leases into the software. Then going forward, there might be a bulk upload if you enter into a new master lease agreement with lots of assets under one agreement, or you acquire a business, and all of the leases of that new segment of your business need to be imported at one time. So all those scenarios involve bulk upload. It's really efficient, but you don't want to get in a situation where a system just accepts anything, right? You want that to be validated even before it goes into your system. And so what we've done at CoStar is we've created a process of checking the bulk uploads. We'll make sure that it's formatted correctly, that the right type of data is in each field. And if it's not, then we will alert you. CoStar will accept the information that appears correct, and it will flag the lines that do not appear correct and give you the opportunity to correct those. One thing I'll say, it does not do, it does not just reject the whole file and say error. You actually get meaningful feedback on what needs to be corrected. So that's a nice aspect for anybody that's ever tried to get a file into a software. Yakov, I'll turn it over to you for your thoughts.
Yeah, thanks, Matt. And I think everybody's probably heard this before, but if you're implementing any system, the quality of data coming out of it is only as good as the quality of data coming in, which is why all these types of things are important. The other thing to add on top of this is, you can have better quality outside of just day one, which is these bulk uploads. But on day two, if your system has good front-end controls, think workflows, but not only just for the lease administration, but also for the lease accounting cycle, where everything that's entered gets reviewed. You can approve individual fields, approve individual payments, and then those get locked in unless somebody wants to change them. And same thing from an accounting cycle. And then one of the best things that we've actually seen, because this is not as consistent across every provider, is, you've done day one, you've approved everything, you've now gone live with, whatever it is, your 1,000, your 2,000 leases, your 100, your 10. How does day two maintenance of this look like? And the most robust systems out there, and the things that we see and that you should really be striving for, is you should be able to identify what financial fields are the most important. And as people change those financial fields, the system understands that, hey, this is a critical change for accounting, and it moves those schedules into an accounting queue that basically says, hey, lease administration has altered some critical data point that you've highlighted or at least configured in the background. Please review this accounting schedule because we think things may have changed. And those are really, really big things to have that significantly reduce the administration time around this, but also really improve the data of your lease accounting software. And again, if you have good data in there, you have good data coming out, you have, I'll call it clean or good audits, however you want to look at that.
Yeah, excellent points. And I'll just flash a few screenshots here. I'm not going to dwell on these, but they will be in the downloadable slides at the end. But just to give you guys some examples of what some of this looks like in the system. Yakov, you mentioned the workflow. Something changes and the users need to go in and validate or potentially remeasure something. What we've done in CoStar is we've actually made that process configurable. So you can see the check boxes and different on-off switches here. This just gives each company control over how that workflow is presented in their version of CoStar. So, some companies want 2 levels of review. Some companies only want 1 level of review. And really the choices go on and on, as you can see by kind of the matrix of different options here. So really important to be able to dial that in and work it into your system of of checks and balances and controls. On to the next topic, automate reports that you need for disclosures and auditors. So really there are a number of reports that users of CoStar run all the time. But really, the two that people ask about the most often are shown here, the disclosure report and the roll forward report. The disclosure report really is just so much more dynamic than it used to be. Under ASC 840, there were some required disclosures or footnotes, but it really just came down to what was your lease cost and what is a representation of your future lease commitment. Usually we call it the 5-year and thereafter report. So you talk about your undiscounted lease commitment going into the future. Now that's still a requirement, but really I would say the requirements for lease footnote disclosures have probably increased by a factor of 4 or 5. So what used to be maybe a quarter page, to a half page, is now a 2-page or so list of required disclosures. Now, the disclosures to comply with U.S. GAAP, they're required for public and non-public companies. And so the things that we're talking about here that are so much more complicated are, for example, the weighted average discount rate for all your leases, the weighted average lease term for all your leases, and also just the presentation of your total right of use asset and lease liability. That's actually that's new, but it's also can be kind of daunting to calculate, and then ultimately prove out to auditors that you calculated it correctly. One thing that we've noticed, and this is one of those reasons that companies switch over to CoStar, they say, well, our software that we selected to start with, they had a disclosure report, and we think it was accurate, but then when the auditors asked to look at it and then tie it out lease by lease, we had a hard time getting that out of the system. And so what we have in CoStar is the ability to run the disclosure report with supporting details, which would give you lease by lease the numbers that make up the totals. So then it really just becomes a nice packet that you can provide to the auditor, and everything that they need is there. Hand in hand with that is the roll forward report, which basically just gives the opening balance of the right of use asset and lease liability for the period that is being audited. It gives the closing balance for those two accounts, and then it walks through what happened during the period. So it'll tell you what was just normal amortization, what was an impairment, what was a renewal, what was a termination, and on down the list, basically leveraging that functionality that we talked about earlier for remeasurements. That same functionality is used to classify the changes to right of use asset and lease liability for your balance sheet roll forward. So this is commonly requested by auditors. It's been automated in CoStar, and so in my previous roles working in lease accounting at big companies, I mean, we would spend days on this. We'd run details out of the ERP system. We'd have to get it into a meaningful format, using VLOOKUPs. Then we would have to use pivot tables, and ultimately come up with something that gives the auditor a meaningful summary in a roll forward format. But again, it took days, and so with CoStar being able to run this, really instantly, we're saving a lot of time, for you guys, and it's actually been so much of an advantage and so well received. This used to be something that auditors asked for once a year, and companies would have to create it. Now that it's so easy, we have a lot of our customers running it every month. and using it to help with the account reconciliation process to add meaningful support to the rec. Yakov?
Yeah, thanks, Matt. And then the only other things I'll say kind of on top of what Matt had highlighted was in terms of the disclosure report, and honestly really the roll forward, you need to look at it as one cohesive package. So it's not just the disclosures, i.e. the things that are going to show up in your financials, but it's all the supporting schedules. There needs to be tabs that outline that easily allow you to recalculate everything that you're displaying, and it should all be available in one. And this is more of, my next point will be more of just a area of caution. As we've done day one and we are now doing day two accounting, and we have a lot of clients that, have 2 years of public reporting under their belt, FX, so foreign translation, is something that we still continuously see as struggles, especially as you're going from that local to group currency and you're trying to get consolidated disclosures company-wide. Because, if you really think about the standard, you have a non-monetary right-of-use asset and a monetary lease liability, so that obviously has different FX implications and how you translate. And those are very complicated things to make sure to get right. And, we always kind of say, as a word of caution, make sure that your your lease accounting solutions are really doing these things correctly. And also in the roll forward reports, in 2018, or you may even see this right now as you're, shopping around for softwares, that wasn't common. Really, that was a roadmap type item and has just really been implemented in the last probably, couple of years. But reconcile those roll forward reports back to disclosures, run them in local, run them in group currencies, and just see what kind of information you're getting, just to make sure that you're getting accurate information, i.e. what you want this report to portray is what it actually is portraying and calculating.
Absolutely, yes. Thank you for that. And here's just a quick snapshot of a roll forward report. I labeled this truncated sample just because it would actually not fit on a slide if we showed the whole thing. But this just gives you kind of the flavor of that report. And then, as I mentioned, these are not the only two reports that are run frequently out of CoStar. You can see those here, and I won't read them off. Other than say that, as Yakov mentioned, FX or currency conversion has certainly been a huge concern for multinational companies, and taking the monetary and non-monetary amounts, getting those into functional currency in the right way. And then ultimately into reporting currency, that's a major concern, and actually something that the lease accounting system needs to have the ability to store a historic rate for those non-monetary asset balances. So if you have those FX concerns, certainly ask those questions up front as you're evaluating software. The disclosure report in CoStar, the roll forward report, the reports that you use for forecasting and account reconciliations, among others. All of those reports have currency capability. All right, Michelle, over to you for the next polling question.
What concerns you most about performing lease accounting under the new ASC 842 and IFRS 16 standards? Please be sure to make your answer selection and press submit for your answer to be recorded. I'm going to give you about 20 seconds left to make your answer choices, and we'll move to the results. And here are our results.
Okay, thank you, Michelle. And yes, I see the majority here say the how-to details of the new standards. So that's just something that certainly is a big concern. I'd say we have seen a lot of companies kind of put the cart before the horse. They start implementing software and think that it's just going to solve everything. But there are a lot of accounting policy decisions to make up front. So that's where it is really important to have somebody in-house, understand the standard, or talk with somebody like Yakov, who's done this, 30 plus times at different companies. Get that expert advice and make sure you're on the right footing, from a policy standpoint. Then that actually makes the software compliance project go much quicker and easier. But moving on to the next step, number 7, customize reporting with company-specific fields. So this one, is a little bit on the fringe of lease accounting, almost, I'd say maybe more on the lease administration side, but certainly goes hand in hand. The reality is that while ASC 842 has the same accounting rules for everybody, certainly not every company's leasing operations is one size fits all. And, some examples from my personal experience, I mentioned I worked for a big tower company. We had the need at the tower company to track the livestock clauses. So what a livestock clause is, you have a farmer who allows you to put a tower on his land and leases the land to you, a piece of his farmland. There needs to be a clause in there, in many cases, what happens if a cow gets stuck in your fence, right? Not something that every company has to deal with, but certainly important for a tower company. Another one, a home improvement retailer, at Home Depot, we started adding appliance mezzanines to stores. And what that was is basically a balcony where you could double the square footage of the area of the appliance department. So we needed to know that square footage for leases where that applied. And maybe one for restaurant companies, the pandemic definitely brought this to the forefront. Maybe at some point, a restaurant company needs to know exactly how much outdoor seating they have. So all things that are certainly not applicable to every company, but if you're in one of these industries, and there are, I'm sure, hundreds of examples, each company on the call today probably has one. You want a system that can allow this flexibility, let you add a custom field, and also report on that. And that's what we've worked hard to develop in CoStar and make available. Yakov?
Agreed. And the only one thing that I'll add on top is, really in day one, nobody did what I would call custom reporting. So all these different softwares have an ad hoc reporting tool. If you right now, have an employee, whether it's accounting or lease administration, that every month is running 4 different reports through the ad hoc tool and then combining them manually and all those types of items, start looking into the custom reporting that's being offered or can be offered from your various vendor and move those into a standard canned report where you can kind of save that amount of time and just cut it out of the month-end process.
Yeah, absolutely. And this next slide just is a representation of, if you don't have that functionality in your software, you're in dozens of Excel spreadsheets every month, and nobody likes that. So now on to number 8. We're in the home stretch here, and we do have an eye on the time, so don't worry, we'll get you out in time for your next meeting. The next best practice is maintain separate schedules for book tax differences and other areas of accounting. So the most common example of this is a tenant improvement allowance. ASC 842 says the TIA becomes part of the right of use asset when it's paid up front. So that's really all you need for ASC 842. And so what we found out is a lot of software has the functionality to add that to the right of use asset. But what happens is the tax department comes around, at least once a year and wants to know, well, what part of the right of use asset is made up of a tenant improvement allowance. And if it's all been lumped into one number, the accounting team has no way to give them that information without creating extra schedules and maintaining them offline. So what we've done in CoStar, we've allowed the flexibility to have a separate schedule for TIA. It all rolls up to the right of use asset, It all rolls into the disclosure report. The ASC 842 accounting is correct, but you don't lose that detail that you need for tax accounting. And some other examples of this, include purchase accounting adjustments, and then, many times when there's a discontinued segment of your business or, discontinued operations, you may need to use this functionality as well. Yakov, over to you.
Yeah, sure. The only thing I'll add on top of this is similarly, purchase accounting, all those things, debt covenant compliance can also be this. And just don't be afraid to have multiple schedules attached to one single lease. That's the real answer here is you can have TIA, you can have your 842, your debt covenants, your statutory, all can reside within one system.
Yeah, definitely. And here's just a representation of that. You can see there's two tabs. The TIA tab is highlighted with the red arrow, and then the other tab that's kind of gray is the quote main lease accounting schedule. And you can see them side by side, always there, and then they're rolled up into reporting as needed for ASC 842. The next one is match the incremental borrowing rate to leases automatically. So this one can actually be a huge time saver for companies because there are really dozens or maybe even hundreds of rates to choose from. Now, non-public companies have the ability to use a risk-free rate, but even when you have a risk-free rate, that can change based on whether it's the 5-year risk-free rate or the 10-year or 20-year risk-free rate. So in any event, you're going to need to track different discount rates, whether it's a risk-free rate or it's a incremental borrowing rate. And what we found is, especially for our multinational customers, they had hundreds to choose from because you delineate based on the lease term, as I mentioned, 5, 10, 15, 20-year lease terms have different rates. You delineate based on the type of lease, maybe whether it's equipment or real estate, based on the currency and maybe the geography as well. So if you think about all of those different buckets and then combined together, that's how you end up with hundreds of rates to choose from. What we've done in CoStar, we've automated that process so you can have one department, perhaps your treasury team, upload a list of rates periodically, and then the software will automatically select the correct rate for your lease. So it really just takes all the busy work out of that. The accountants aren't running around trying to look for a rate, and it also, of course, reduces user error. Yakov?
Yeah, agreed, Matt. I'll just say great functionality. Make sure it's something that you have if it's important to you, and especially if you have a really complex environment. And then we'll jump to the next poll question.
Absolutely. Yeah. Here's just a screenshot of that functionality. And Michelle, we're on to the next question.
What is your biggest challenge with your current lease accounting software or biggest concern with selecting a new system? Please be sure to make your answer selection and press submit for your answer to be recorded. I'll give you about 20 seconds left to make your responses, and we'll move to the results. And here are our results.
Okay, excellent. Yeah, thank you for your responses there. I'll dive right into our last point, number 10. Use market data to easily estimate fair market value for real estate. And on this one, I'm just going to show an example, as we talk about this. So basically in CoStar, you have access to real estate information and comps, really the same level for your buildings that you occupy, same level of detailed information that your broker has. Okay, so when you do need a fair market value, the kind of the traditional process is the accounting team calls the real estate team, who calls the real estate broker, who looks it up in CoStar, calls the real estate accounting or the real estate team back, who calls the accounting team back, and gives that information. With CoStar's lease accounting solution, you have this information at your fingertips, so you can when it comes time to do the finance versus operating lease test, when it comes time to evaluate impairments, the business combinations, and you need this fair market value information, you can just look it up right there on your own screen, without not that you mind talking with all those other folks, and not that they mind either, but it just takes time, and there's very little of that to go around. So we're trying to give you functionality here to put some time back in your day. Now on that one, I think we'll switch to the final polling question, Michelle.
Which functionality or feature would help your job the most for lease accounting under ASC 842 and IFRS 16? Again, please be sure to make your selections and press submit once completed. I'll give you about 20 seconds left and we'll move to the results.
Yeah, thank you for that, Michelle. I know you will present the results when they come up, but I wanted to watch the clock and just say thank you to everybody for joining today. Yakov, I really appreciate your input and all of the insights that you provided. And again, thanks to everybody, and hope you all have a great day.
Thank you, everyone. Thanks for having us.
This marks the end of our webinar. Thank you for joining us today. We look forward to you joining us on future webinars. You can find information about upcoming webinars in the resources window. Don't forget to download your CPE certificate in the certification window. Your CPE certificate will also be available to download in the thank you for attending email that will be sent within the next 24 hours. If you have any questions regarding CPE credits, please feel free to email cons@financialexecutive.org. Have a wonderful day, and again, thank you to our speakers for today's webinar.